I slightly worry that something's gone wrong in their forecasting models, but particularly around the tightness of the labour market. And I think one of the mistakes he admitted to making yesterday was that when furlough came to an end, they were expecting the labour market to weaken, and of course it didn't.
Do you have a sense in your mind, because this is your business now to scrutinise the government, what does good look like in your view after today?
Well, I think the big tick for us today, something that we on the committee have been calling for since the beginning of the summer, is for the Office for Budget Responsibility to be providing its forecast. So that is a sort of independent check on the government's homework. And if you recall, when Kwasi Kwarteng delivered his statement in September, he did not include an Office for Budget Responsibility forecast. So that's the number one thing that we've been calling for, and we're pleased we're going to see today. And I think that's going to help with the second part of what we would like to see, which is something that will go with the grain of what the Bank of England is trying to do independently to bring down inflation. So we want to make sure that what we hear today is something that will also be uninflationary. It won't actually add to inflation. Inflation is, the worst tax on the country, and it's the worst tax, particularly for very poor people. So we want it to be a non-inflationary budget. And then the third things that we will be looking for are things that are helping with the UK's productive growth capacity. That is an important issue, and we expect that we will see some probably delays to some infrastructure projects, but we would want to see investment in infrastructure and measures that improve productivity.
Is there a risk, Harriet Baldwin, that as we try and tackle inflation, as you rightly say, it's a big worry for everyone, but it's currently being caused by overseas external factors? And the approach for dealing with it is squeezing spending by the government and raising interest rates by the Bank of England. And there's a danger that that could make the problem worse. The inflation is not happening because everyone in this country is spending too much money, wages are spiralling. It's happened because of Ukraine and to a lesser extent COVID. Are you worried that we could risk deepening the recession by stifling the economy at the wrong time?
Well, you're absolutely right that this is a really important point, because the governor says that about 80%, this is the governor of the Bank of England, says that about 80% of the inflation that we're currently experiencing comes from those overseas factors, specifically the fact, obviously, that Putin has illegally invaded Ukraine, and that this has led to this spike in energy prices. He's effectively weaponized the price of energy against the UK economy, and against the world economy. So you're absolutely right. That's about 80%. The other 20% is more domestic factors. We've got a very tight labour market at the moment, and one of the ways that inflation can persist is if inflation then gets fed through into wage rises, and then that gets fed through into more inflation, and that gets fed through into wage rises again. And so we are seeing a rise in wages. One of the things that you would want to make sure is that those on the lowest wages are getting strong increases to help them with the cost of living. But I think you wouldn't want to see a wage price spiral. So that's a delicate balance to follow.
But the danger is, of course, that for 20% to deal with 20% of the problem, we could be damaging the economy. That is that's a risk, at least, isn't it, with all of this?
Well, I certainly think that it's really important that inflation come under control. You're right that some of the external factors, they will roll out of the 12 months numbers automatically at some stage, unless we get a further energy price shock. And it's really important that there are measures in the announcements today that help households with that cost of energy, particularly those on the lowest income. So that's really important, that we withstand this shock, this attack that Putin has delivered against us. But at the same time, we can't allow this wage price spiral. So, that would just mean that rates had to rise more to end the inflationary pressures. And so I do think that we're likely to see the Independent Bank of England, which has already raised rates up to 3%. I think we expect them to do more of that later this year.
You had the Governor of the Bank of England before your committee yesterday. What did you make of his performance?
Well, I think one of the things we've been focusing on in the committee for almost 2 years now is some of the inflationary pressures that were emerging actually before the invasion of Ukraine. Of course, they've been made so much worse by President Putin. But The governor seemed pretty confident that things would not get worse from here, that we would not see much worse than this 11% rate that was announced yesterday. I slightly worry that something's gone wrong in their forecasting models, but particularly around the tightness of the labour market. And I think one of the mistakes he admitted to making yesterday was that when furlough came to an end, they were expecting the labour market to weaken, and of course it didn't. And that has led to very tight labour markets and wage pressures. And I think that's what they're particularly worried about at the moment.
Was he too slow? Were they too slow, do you think? That from the tenor of your questions, it felt like you thought that they could have got a grip on inflation earlier.
Well, we had a range of members of the Monetary Policy Committee on the panel yesterday, not just the governor. There was also Catherine Mann, who I think would have been more what I would have liked to see. So she was calling for rate hikes sooner and for larger rate hikes. And I personally, remember what my grandmother used to say to me about a stitch in time saves nine. I do think it would have been better if they had moved faster and dealt with the domestic inflationary pressures earlier. But I obviously, that's happened now. We are where we are, and I think what everyone wants to see is inflation come back down to the target 2% level.
Just finally, is there an elephant in the room in this budget and all of our conversations, which is, I suspect, won't get mentioned very much today, if at all, by either main party? Brexit. Will anyone be honest enough during our conversations to say that Brexit has a huge economic impact on our country over the last couple of years and likely for the next 3 or 4 or 5 years? This is not to have an argument about whether it's right or wrong to leave the European Union, but there is a huge economic cost in the short term to doing that. Do you think that is the elephant in the room here?
Well, I would make a couple of points. First of all, I think the bigger economic shocks were COVID and obviously the pandemic and recovering from that, and now Putin's weaponization of energy prices. But we've been quite clear in our reports that there is a Brexit effect. And yesterday we took evidence from one of the Monetary Policy Committee members about the Brexit impact, but it's further down the scale of impacts. I would also make the point that obviously during the referendum campaign, these points were made very clearly by a lot of people, and the UK chose to leave the European Union, and we must respect that. And that has happened, and we must make sure that we make the most of the opportunities that do exist outside.